Welcome to this month's Market Update. I'm here today with Dr. Vivian Xu, Senior Member of Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Vivian.
Hi, Roy.
Well, the big news at the moment, of course, is the US Federal Reserve rate cut, bringing rates down from their highest level for over 20 years, and by quite some margin. Are you surprised by the timing or the significance of that cut?
Well, I wouldn't say I was particularly surprised because the market has already been pricing a 50 basis points cut in the days leading up to the Fed meeting. I think there was a bit of debate around whether the cut's going to be 25 or 50 basis points. It turned out the Fed went with a more aggressive approach in this early cycle of the easing. I think a large part of that confidence of the Fed came from the inflation continuing to come down and getting closer to the 2% target. It gives room for aggressive easing. Another aspect to this is probably the Fed has been criticized for always lagging behind the cycle. Historically, they always cut late and the economy is already in a recession. And this time, it's possible they are trying to get ahead of the curve and deliver large rate cuts in the early cycle. So I'm having looking at the notes here, coming out of the Fed meeting. The Fed is forecasting a GDP growth of 2% in 2024 through to 2027, and unemployment rate is expected to peak at 4.4% in 2025, and inflation is expected to stabilize at 2%. Overall, this paints a picture of soft landing scenario, and I think it's quite clear going forward. The problem is no longer whether or when the Fed is going to cut, but more importantly, how fast the rate is going to be needs to be lowered to achieve the soft landing scenario that the Fed is hoping for.
Okay. So you mentioned briefly the labour market in the US. There's been some kind of grey or gloomy movement in the signals there, with it.
Yes, exactly. It's quite mixed signals that we are seeing coming out of the labour market recently. If the increase in overall labour unemployment rate is driven by the new supply, meaning new immigrants into the US, that it's not necessarily a bad thing for the growth outlook. And when we look at the data, the increase in unemployment rate is a combination of both. So we are seeing the re-entrance and new entrance of new labor into the market being a significant contributor of the increase in overall unemployment rate. But the majority of the increase still comes from the permanent job losses, which is concerning.
Yes. And so with those recent cuts, what sort of impact will they have on aspects of markets more generally?
Yes. So on markets, historically, the rate cutting cycle are usually positive for growth assets because a lowered interest rate means lower borrowing costs, and it typically provides a boost to the growth assets.
Yes.
The US pivoting into a rate cutting cycle may also have important implications on different parts of the global economy, in particular its major trading partners like Japan and China. The narrowing interest rate differential between the US and Japan was one of the main reasons that drives the extreme volatility that we've seen in early August. And for countries like China that are struggling with economic growth, the Fed pivoting is viewed positively because it is expected to free up more spaces for more aggressive easing measures from the Chinese central bank. The foreign direct investment into China has already turned positive in the past quarter, and part of that was driven by the hope that Fed is pivoting and China doing more stimulus. This came in even before the major stimulus package was announced in late September in China. which has triggered a significant market reaction initially. We will talk about this in our next monthly video update.
Well, lots of moving parts there. Thank you for that analysis, Vivian. And thanks for watching this month's Market Update.